So if you thought the whole GameStop saga was a thing of the past, you might want to buckle up. The stock is back on a pretty wild roller coaster. But this time, it's not just about memes. It's a real battle between nostalgia, market mechanics, and the cold, hard reality of the business itself. Let's get into it.
Okay, so the big question is, why? Why is GME suddenly behaving like it's 2021 all over again? The stock's been making these huge moves, but the thing that kicked it all off this time isn't some massive Reddit army. It's actually something way more unexpected, and it all kind of pivots around one key number.
And that number is $23. You can almost think of it as the current line in the sand, the main battleground in this war between hype and reality. Pretty much everything we're about to talk about, all the buying, the selling, the crazy speculation, it's all happening right around this critical price point. To really understand this rebound, you have to remember where GME was just a little while ago. The whole meme stock craze felt like a distant memory, and the share price was kind of just slowly fading. It really looked like the story was over. So what on earth just happened? Well, just when it seemed like the hype was officially dead, the stock just roared back to life. A massive wave of buying pressure came out of nowhere, and it totally caught Wall Street off guard. But the interesting part is, this wasn't kicked off by some great earnings report from the company. The real trigger was something a lot stranger. So what was this strange trigger? It wasn't some complex trading algorithm or a secret Wall Street memo. The entire thing, this whole resurgence, can be traced back to a single, almost random event that basically poured gasoline on the dying embers of retail investor sentiment. And this is the wild part. The spark wasn't new information about GameStop's future. Nope, it was a ghost from its past brought back to life by one of the most famous or infamous names in the investing world. This timeline just shows you how powerful sentiment has become in today's market. So Michael Burry, the guy from The Big Short, he simply posts an old email from 2019 that he'd exchanged with Roaring Kitty. That's it, an email from years ago. And that simple act of nostalgia was enough to ignite this firestorm of buying, fueled by a mix of good memories and a massive dose of FOMO, the fear of missing out. But all of that nostalgic buying pressure didn't just send the stock rocketing straight to the moon. Oh no, it immediately slammed into a wall. A technical reality that was already drawn on the charts, and that kicked off this fierce tug of war between the bulls and the bears. And this is that tug of war in action. On one side, you have the hype-driven buyers pulling the price up. But every single time it gets near that $25 to $30 ceiling, wham, it hits a wall of sellers, people who bought lower and are now taking their profits. And on the flip side, that $19 to $20 zone is acting like a floor, where buyers see it as a good deal. The stock is literally trapped between these two levels. And you can see just how intense this whole battle is if you look at the options market. The volume of call options, which are basically just leveraged bets that the stock is going to soar, it recently tripled its daily average. That's not just interest, that's traders pouring money into some really high-risk, high-reward bets on explosive upward moves. So, okay, we've got the social media hype, we've got the technical battle on the charts, but all of this is kind of happening in a vacuum, totally separate from one really crucial question. How is GameStop, the business, actually doing? Let's peel back the ticker symbol for a second and look at the actual company. This quote from this source analysis really just perfectly captures the core issue here. All the excitement we're seeing, it's built on feelings and nostalgia, not on a fundamental improvement in how GameStop is actually doing as a business, and that makes the whole situation incredibly fragile. And this is the why behind that fragility. The company is still facing the exact same problems it had before this rally. I mean, it's a brick-and-mortar store in an increasingly digital gaming world. It's still closing stores, and its attempts to get into new things like crypto, well, they haven't really delivered a clear path forward yet. This is the fundamental reality that all the speculative hype is kind of ignoring. So you've got hype pulling one way and reality pulling the other. Where does it go from here? Well, let's look at the key risks that could pop this bubble, and then the triggers that could maybe send it even higher. Think of these as the tripwires. First, the stock is basically addicted to hype right now. If the news cycle moves on, that buying pressure could just evaporate. Second, that resistance ceiling we talked about, it's a trap. If the price fails to break through, anyone buying in now could be left holding the bag. And finally, the high short interest makes this whole thing a powder keg that could explode in either direction at any moment. So here's what you need to be watching. The first big test is that $25 to $30 resistance zone. If it can convincingly break above that on high volume, that could signal a real shift. Keep an eye on the options market to see if the speculation stays high. And, of course, just watch for any new catalysts. Another post from Burry, a big announcement from the company, or whatever the next big thing is that captures retail investors' attention. And that leaves us with the ultimate question, right? Is this sudden burst of energy the start of a genuine, sustainable turnaround for GameStop powered by a loyal investor base? Or is it just a brief, nostalgic echo of a past frenzy, one that's destined to fade away once the hype moves on to something else? The answer is probably going to be decided in that battle between the ceiling and the floor.